So market reaction to the escalation between Iran and Israel over the past weekend. And, the markets actually, I think, took it pretty well. It really wasn't until the Israelis said that they would retaliate for all the missiles that were sent from Iran directly to Israel. This was the first time that Iran itself sent these missiles to Israel. Usually, it's their proxies, whether it's Hamas or Hezbollah or anyone else, the Houthis in Yemen. They're the ones that seem to be attacking Israel. But this was the first time that Iran actually, sent missiles, sent drones to Israel directly, which, of course, as many of you know already, were stopped, and only a very small percentage got through and landed in Israel. But the Israelis say that they will retaliate. And it really wasn't until they said they would retaliate on Monday that the market sold off. Coming into Monday morning, I thought we'd see a spike in oil, which we didn't see. We would see the markets down significantly, which we didn't see. It almost was as if, well, Iran did what they did, but it didn't really cause any damage. And so perhaps Israel came out on the better end of things. But now that Israel is saying or vowing that they will retaliate, I think the market is now on watch. And I think investors are on watch as well, a little bit nervous. Obviously, the uncertainty that a war brings, whether it's in the Middle East, whether it's the war in Ukraine, between Russia and Ukraine, or any war around the world, there is obviously a lot of fear, a lot of uncertainty. And that usually plays out in the stock market to the negative side of things. And you tend to see gold spike when something like that happens, because gold is that investment that everyone flocks to when there is uncertainty or people are nervous about something in the world. And so people move to gold, move away at times from the US dollar, or actually even move into the US dollar. I've seen the US dollar, which is a good fear gauge. People tend to buy US dollars when they are fearful. At the same time, which is a bit contradictory, they also can buy gold, because gold priced in US dollars usually moves higher when the US dollar shows weakness. But I have seen both move up at the same time, especially at a time when we see a potential war breaking out in the Middle East and an escalation of what's going on there. So I think for individual investors to be fearful, to maybe pause and maybe be on the sidelines does make sense. However, when you look at these types of situations, and again, just looking at it from the financial aspect of things, because this is a financial show, these types of events tend to be short-lived and tend to be good buying opportunities. We see over time when we do have wars, or we have big storms that hit the United States, or anything else, any big events, terrorist acts, etc. A lot of negativity out there. The negativity is very short-lived. The market may quickly go to the downside or move to the downside, but then it's always followed by a tremendous upward swing in the markets. The first chart I have for you today clearly shows this. The history of recoveries after a market falls. And I think the main thing for this chart, and for some of you, you may not be able to see it too well, but the red shows a market falling initially based on some sort of crisis. The Great Depression is on the far left, and the inflation spike is on the far right. And the purple actually represents the returns over 10 years after the crisis happens. And that's why there is no purple or green, which is 5 years after, because we don't have that since the inflation spike in 2022. But the main point of this graph is to look at the blue. The blue clearly shows that there is a bounce back. There is a clear bounce back when a market sells off for reasons like a war, like a depression, a recession of some sort, an oil embargo, Arab oil embargo in the early 70s, the dot-com bubble, which happened in the early 2000s. The market always bounces back. And so if we do get something that escalates in the Middle East, I think individual investors should take that as, at some point, as an opportunity to continue to do what they have been doing over time, which is use a pullback in the markets as a buying opportunity. And so I don't want individual investors to try and time this market at this point, wait around to see what Israel does, what Iran does. I think you want to look for good quality investments at all times. And whether or not they're a little bit better quality when the market pulls back for these reasons or not is irrelevant. You just want to continue to look for good quality investments. And I guess the second chart and last chart I have for this segment is one on WTI or crude oil. And you're going to see here that on the far right-hand side, you'll see the price of oil was moving higher, sort of flattened off, and actually dropped a little bit. And oil is actually down over $1 this morning, down in the $84 range. So even with all this instability in the Middle East, which usually causes the price of oil to escalate, we're seeing oil coming down because I think the market believes that cooler heads will prevail. So once again, if you're an investor today, don't wait for a signal or wait to see what comes out of this. We may not see something for weeks, for months. To wait, as I always say, for it to be blue skies everywhere, you're going to be waiting a long time. Unfortunately, there are always storm clouds on the horizon. We look at what happened in October in Israel, and the market still reached all-time highs by the end of March. So markets will move higher based on earnings, based on interest rates and other things. And I think individual investors, before you sit on the sidelines too long, I think you need to keep that in mind.